Riveting content. Empowering your life. Welcome to the Sphere. This episode is sponsored by Elite Dental Wellness. At Elite Dental Wellness, Dr. Ashandra Batiste understands that one of the biggest obstacles is dental fear. The vision at Elite Dental Wellness is to ensure every patient is treated with respect, ultimate care, patience, and love. Call us today to make an appointment at area code 713-789-8680. Looking to advertise? Join the Sphere's vast demographic reach of thousands of people all over the world. Send an email today to advertise@thesphere.tv or call us at area code 832-772-7789. KOG and Company. Are your unique gifts and talents changing the world? Do you desire to belong to a community of unity? Visit KOGpassion.com to learn more about the Unleash Your Dopeness movement.
Hello, everyone, and welcome to the Sphere here on the Money. Welcome to the Money Factor here on the Sphere. My name is LaShonda Johnson, and I am a certified financial educator and also the co-founder of the Houston Housewives of Finance. And
I am Tony Sanders, also the co-founder of the Houston Housewives of Finance and your licensed financial professional. We're back again. It's Money Mondays here on the Sphere on the Money Factor Show.
Yes, yes. And so today we have a very exciting show lined up for you guys as usual. We're continuing our financial foundation series, and I think this is the last of the series today.
Yes.
So I know you guys are saying, okay, it's finally. I'm glad. Well, today, of course, the roof on the house that we've been discussing here on the Money Factor is investing. And so today we have an awesome guest that we're very proud to be able to bring to you guys that's going to be able to share in this conversation with us and also lend some of her expertise. And so I'm proud to be able to welcome to our show Angela Matthews with Happy Investors Method and also the Mindful Investing Club. So Angela, are you there?
I am. Thank you so much for having me. It's wonderful to be here with you, ladies.
Welcome, Angela. Welcome. Okay, so again, we're talking about investing. So can you give our viewers just a little bit of information about yourself and what you do and how long you've been doing it?
Absolutely. So I'm the founder of the Mindful Investors Club, which is a private club for people who want to know more about investing. We'll talk a little bit more about investing clubs today, but I also created a method called the Happy Investor Method, which takes the stress out of learning how to invest. So it's an educational platform similar to Rosetta Stone. You don't know anything, you go in, you want to learn more, and it just pretty much uploads just like that. I've been teaching investing for about 3 years. I've been an investor myself for about a decade, so I've been an investor for a long time. And I started at Goldman Sachs. That's where I got my seeds. But after realizing that this is something that is not common, I thought everyone invested, right? Like you wear Nike, you own Nike. Not the case. So I decided to get on my soapbox and start preaching the good message of everyone should at least own a stock.
Okay. Awesome. Okay. So what we want to start off with today talking about is because since Angela is a part of an investment club, giving us some information about what an investment club is. So those of you who are wondering, we're going to share an article with you from Investopedia, and it talks about what an investment club is, and it gives you 4 tips about joining an investment club. And we're going to allow Angela to just kind of give us some feedback on that. So this is her area of expertise. So we're gonna first of all jump into the article. And so Gary, if you can give us the article, please. I don't know what that means.
He's giving her a signal, but
he's giving me some kind of signal. I'm like,
thinking,
okay,
woo, woo.
Yeah, we are Facebook Live, so I'm like, okay, I need to know where we're going here. But as we're so while Gary's doing that, Angela, can you give us the definition of an investment club?
Yeah, absolutely. So an investment club, typically speaking, is when a group of people pool their money together to make investments, whether it's in the stock market or in other securities. It doesn't necessarily have to be the stock market. Sometimes people do this for real estate. Sometimes people do this for other businesses. But the whole intent is to be around a group of people who together make decisions together and then profit or lose together. There are other forms of investment clubs. There are educational investment clubs or associations where people mainly just get together and share information. And so the key takeaway is just that you don't have to do it alone. That's the clear upside of an investment club, is that you don't have to feel the burden of researching and finding things out and executing all by your lonesome self.
Okay, that makes sense. All by your lonesome self. You know, a lot of people jump into the investment industry, or not in industry, but they jump into investing all by themselves,
Right.
or based on something they saw on television,
Something they
based
heard.
on something they heard, based on something their coworker did.
Absolutely.
And you know, that's our thing, is that a lot of people go in blind without the education. So of course we are an educational platform.
Absolutely.
And we believe in making sure that you understand decisions that you're about to make before you make them. And of course, investing, it carries risk, definitely carries risk. And I always say to my clients, I don't know about you, Tony, but if you can't afford to take the loss, don't play the game.
Don't play the game.
And there's a lot of games to play out here when it comes to investing. But before you do that, you just need to have some wisdom.
Absolutely.
Okay. So do you have the article ready? Okay, awesome. Let's jump into the article. So again, this comes from Investopedia. It's 4 tips for joining an investment club. So investing in the stock market can be intimidating. So how differently investments, or how to differentiate between the different types of securities, investing styles, and trading strategies, analyzing market data, financials, and how and when to act. I mean, that could be pretty daunting, right, Angela?
Absolutely. It sounds like a lot, and it sounds more intense than it actually is, to be honest. When you think about it, if you have a plan, say that over the next 6 months you want to learn more about investing, that's a decent amount of time to get your foot wet, right? To get your toe in the water for it. So it doesn't take a lifelong time to have it. And with wonderful folks like us, you don't have to do it alone. So I completely agree with you with everything you said, but it's almost saying like, hey, you have to bake a cake. And if you don't understand what that looks like, you maybe think, whoa, how am I supposed to bake a cake? But if someone's like, there's actually a recipe here for this, then it becomes a lot easier.
Right. Okay. Let's go back to the article. You want to pick up there where I left off, Angela? Can you see it?
She can't see it.
Oh, you can't see it. Okay.
So where are we? I can pick up.
Okay.
You are, and then I'll just pick it up.
Okay. So now it says, but if you are interested in learning about the stock market and how to take control of your money, an investment club may be worth considering. You can read about the strategies and other things. It gives a link here too, but it starts off with saying, what are investment clubs? They can be found in most municipalities and regions, and have been around for decades as a way for people to, with limited funds, to contribute and participate in large investments, as well as get the firsthand experience and education. So on that note, Angela, can you kind of give us an idea of what are the boundaries for an investment club? So if I'm a brand new person and I'm wanting to join the investment club, tell me how it will work for me being a brand new participant.
So typically speaking, you'd find one in your local area. There are tons of companies and investment clubs online. So you've got public investment clubs, and you also have private ones. And so the public ones are the ones that have to be within SEC compliant, because they're publicly advertising their membership. And this is if they are actually pooling together funds, or you can find one in your local area. And for some clubs, you may not actually have to pool together your funds. Some clubs will let you be there in an audit mode, where you can just sit there and start learning, because it is a big commitment. It's a big decision to actually introduce your hard-earned money with other people's hard-earned money to make it work together. And so what you can do is just simply Google investment club in my area, sit in for a couple of meetings, and see if it's something that you want to do. And like I said, whether you decide to put your money in or not, the main goal for you is to get educated, right? Is to start understanding what is the landscape of investing. How is it that people play in the stock market, and that it's a game, but you want to understand who the players are, what the terms are, who the companies are, and what the investments are. And there's no better way to learn than through the experience of others.
Okay. And so let me ask you a quick question. I don't know if Tony has any questions, but so, I see that they're offered through local municipalities and regions and things of that nature. So if I'm interested in joining the club, is there a minimum amount of money I have to have?
And I would like to know, added on to that, is there a membership fee?
Yes.
So some clubs do have a minimum. So sometimes the minimum could be 1,000, 5,000, 10,000, anything that can significantly be pulled together to buy a large sum of investments. And some clubs also do have a monthly fee. Sometimes that could be $80 a month. Usually comes with the actual research that they're using to find out about their investment. It comes with, say, if they're meeting in a physical place, these are the dues that you have to pay to be there in the physical space. And there's also a lot of work and admin on the back end in terms of finances. So that's where your fee money would typically be going.
Okay.
Okay. Mm-hmm. And so let's go back to the article, because I'm sure I'm going to have some other other questions about that. So now, how are investment clubs set up, Tony?
It says, if you start a new investment club, it's a good idea to provide a solid structure to ensure the club's agenda is carried out efficiently and without friction. An investment club is usually a legal partnership or a limited liability company consisting of 10 to 20 members. Once it's legally established, it is imperative and standardized. Accounting records are established for it. After all, unlike independent individuals investing directly into the stock market, an investment club pools money from each member. And I think that's what Angela was just saying, that they just kind of pool their resources together to be able to purchase one larger stock.
Okay. And so when you're getting into what you're going to actually invest the money in, so is that a group decision? Do you guys have meetings? What's the structure of the club?
Who makes the decision on what to buy?
Oh yeah, who makes the decision? So I mean, how do you prevent conflict from happening when there's a group of people and it's 10 of us, and I'm thinking,
I want to buy
Tony,
this.
I don't like your choice. I mean, how do you handle that?
Right.
So in my club specifically, we do not pool together actual investments from people. So we're in the education phase of my club, right? So I personally don't have to go through that just yet, even though in our 5-year plan, we do have terms set up for that. But right now I find that the more educated people are, then the more they can actually put an educated vote out there, right? Naturally, like our politics works in this country, right? And so the more educated the group is, they'll actually put it to a vote, right? And sometimes they have to have simple majority or actual quorum, right? So if there are 20 members and 11 say we want to do this and 9 say we want to do that, there's a good chance that that's not going to work out, because almost half of the membership will be unhappy. So sometimes you have many subcommittees who will oversee the decision for specific kinds of stocks or bonds, and they'll be the main focus point and will present a security to the group, and the group can vote on the security themselves, versus say, hey, this is like $2 million that we have pools here. We're going to throw it all into Facebook or Apple. It typically doesn't work that way.
Oh, okay. For some reason, we can't hear you, Angela.
We lost that.
Oh, okay. Okay, we got you back. So obviously, because you guys are a group, then you're participating in mutual funds. Is that what you're doing? Because is that what you're doing, or no?
Oh, so I was saying for my stage of our group, we are not pooling together funds. So in my club, what we're doing now is everyone has their own funds, and what we do is mainly educate.
Oh, I see.
So it's more individual.
Okay, so you're giving them education about what they're doing on an individual level.
I'm giving them education on a group level, and they're using it on their individual level.
Oh,
okay.
I see. I see. Okay,
so
okay.
There are people who are fans of tech. There are people who are in healthcare, naturally, because this is their profession. And they also share information based on what they know is going on in the market based on their expertise.
Okay.
So mine works a little differently, because right now I didn't think it would be smart to pool money from people to invest if they didn't understand the concept of investing.
I agree with you 100%. That's a good.
So I don't want your money if you're just like, make me $1 million. No. Like, I'm going to show you how to make your $1 million for yourself. And then when you figure it out, come back and share your story along with the other people who are sharing their stories. And then later on, with those investments and those benefits that you've received, we can then pull a portion of the funds that you've already invested and has already been successful for you into other investments together. Because my goal is not for this club to make or break you, right? Which sometimes for investment clubs, people put a lot of money into it, and that's a lot of power out of your control into people who are just like you, right? And there's no rhyme or reason for it to not be with people just like you, but you should diversify your options.
Yes.
So this, I feel safe for
yes.
that.
Makes sense. Makes sense. So we're at the portion in our show that we have to talk about our sponsor. And of course, it's Elite Dental Wellness. So Elite Dental Wellness is, obviously a dental office, but their vision is to create a welcoming practice that will offer exceptional dental care and a lifetime of dental wellness. We're committed to the finest possible oral care and the overall health and well-being of our patients. Elite Dental Wellness is built upon a foundation of integrity, expertise, and service. Through our commitment to modern dentistry, continuing education, and friendly atmosphere, we strive to make our patients feel that they are part of our family. Dentistry can be scary, daunting, and uncomfortable. Dr. Batiste and her team work tirelessly to ensure your comfort. Make your appointment today with Dr. Asandra Batiste at Elite Dental Wellness at 713-789-8680. Bing! I love that part. So it's important to keep your grill shining.
Right.
Okay, so let's go back to the article. And I think we're on we've covered the first 2 out of 4. And so it says is that number 1? What is that number? Oh, okay. So, all right. So it says, think long term. We cannot stress this enough. Do not buy stocks through an investment club if your time horizon is a year or less. Trying to make money over a shorter period of time is a wrong approach, not only for beginner investors, but also investor clubs. A short-term horizon makes it difficult to manage the club's money because for short-term outlooks, decisions to buy or sell stocks need to be made very quickly. Also, most investment clubs meet only once a month. So jump in there with us on that one.
Well, I have something to say. I'm glad that this talks about it right here, because now I'm getting into something like I wanted to talk about, because I think a lot of times that I've seen that people jump into investment clubs and they're looking for that get rich quick scheme or something to pay off really fast, and it takes time. It takes time when you're investing, whether you're a beginner or whether you've been into it. So I like the fact that the article talks about that. Say, hey, look, if you don't have time, don't jump in there like that and thinking that you're going to get some quick turnaround. It's not going to happen.
Yeah, the market is active, and we never recommend that people are looking for a short-term gain to be able to jump in there. Really, if you're trying to create some short-term funds, you need to look at some other solutions. But it's possible, everything is possible with the market, and everything's not possible with the market. So it goes both ways. So what's your thought on that, Angela?
I completely agree. And I think if someone tells you that this is not the case, you should run the other way. And the reason why is because the market is volatile, right? On a day-to-day basis, one company could be worth, example, $45 and then go up to 60 and back down to 45 in just one day. Same thing in a month, right?
Yes.
It can go up and down ridiculously high and then come back low. But it's over the long course of time, meaning that anywhere between 1 year, 5 years, 10 years, that you're going to see that exponential growth, right? And so if it's going to take you a long time to come to a decision just to even buy an investment, right? All that research, why would you want to sell it or cash out or make a decision about it within 30 days or less, right? It's almost
that's ridiculous.
Yeah, there's nothing in our lives that there are things in the market that operate that way, but you always want to track it back to human behavior, right? Think about any degree that you got, right? It takes 4+ years to become an expert in something.
Yes.
You should treat your investments the same way.
Yes, and not to mention some of the people who are jumping into, I would venture to say most of the people who are jumping into investments, they do lack some discipline, some form of discipline and repeated saving patterns.
And the knowledge.
And the knowledge. And so that's kind of been my experience that, again, they're going on based on something they've seen or heard, or investing can provide a serious adrenaline rush.
Right.
But again, it's not something you should do blind. And so, speaking of doing something blind, you don't want to be a blind participant in watching this show.
That's a good segue.
Yes, we need you to go to the Sphere and subscribe if you want to continue to watch the show in its entirety. And while you're there, we would like for you to definitely share the show and write a review. We'd love to hear your thoughts, your concerns, what you'd like to see, what you'd like to hear, what you think so far. Whatever you'd like to say is wonderful. Because Facebook will end here in just about a few seconds. We're only 15 minutes live on Facebook. So to continue to watch, you have to subscribe, share, and then we would like for you to donate. You can do that. There is a button there for a one-time patron or also a person that wants to donate on a consistent basis. So we provide this to you, of course, absolutely free. But if you'd like to contribute to the cause, we'd love to have you. So go right now, like, share, review, and donate. And we're going to continue the show.
Awesome.
So going on, Angela, I was talking about, that particular point talks about time. Time is a matter in everything you do as it relates to money. Money does need time. Investing needs time. We tend to talk about things that we're trying to do as far as having a short-term goal, but even short-term needs some time. And so also having a plan. So when you're a part of an investment club, a part of the meetings or things like that, or your education that you provide, because I know you're not getting into pooling money together yet, but do you talk to people about their vision and their goal or what they expect to gain from this investment club?
Absolutely. And to me, I feel that if you don't understand where that comes from, then you don't know where you're going to go. Right. And so it's really clear goals. Right. To me, I think it's setting up a timeline for yourself. And with that timeline saying, well, OK, I know that I want my net worth at this point to be this much and my net worth at this point to be that much. And granted, not all of it is going to come from investing. Right. You need to actually have your savings. You need to have your policies in place, whether it's securing everything that you own. And then we think about, OK, so if this is the case, how much discretionary money can you put towards this? Because like you said, if you can't lose it, then don't put it in. Right.
Right.
And how long can you keep that money out for? Because you do want it to grow. There's an opportunity loss every time you cash out on an investment that's on an upward trend that's growing. Right. So people who are cashing out now, not a problem. But if you cashed out a month ago and the market is that much higher now, yes. There's opportunity cost, right? And that's the loss that you could have had with your earnings.
So has there been any experience? Have you had any experience where someone didn't have a good experience, and how did that work out?
Yeah.
Well, for me, people do. I mean, because it's real, right? It's real life. You make decisions and some of them work out and some of them don't. But I'm a huge advocate of the 80-20 principle. So over time, I usually tell my students, hey, at least have 10 securities and try to build up to 10. It may not start off that way because the odds are 5 of them are going to flop. Right? Just the way the market works. 5 will flop. There's a really good chance 3 of them may just be mediocre. May come back with a little bit of money, meaning a little bit of friends. And then it's really 2 of them that's going to really just blow it out the water. And those are going to be your Facebook. That's going to be your Amazon. That's going to be, the companies that you just didn't expect. But to me, until you actually diversify, there's no way for you to know who that is. Right. And so a lot of my clients, overall, their portfolios are great. They can't complain. Sometimes they're like, man, I bought this stock even up to the other day and it's losing money. I'm not sure if I should sell it. And I'm like, well, that's up to you. But if you remember when we were in module 2, we created the sell rules that you were going to have, right? You created your own sell Bible. And does this qualify for each thing that you were selling? Like, is this why? Are you being emotional about it? Is it because you checked out the financial earnings and the company isn't doing well and they're making losses? So the decision becomes clear. But overall, the average is that with the 80-20 rule, it's a very high market. So people are still making money overall on average.
Yes. Okay. Well, let's go back to the article and see what else it has to say, Tony.
Okay, it says number 2, define your style. Just as individual investors vary greatly from one another in terms of their investment styles, such as value investing, income stock strategies, and the GARP, and so do investment clubs. It is very important for every investment club to have a clearly defined investment style. Ideally, some of the amounts of quantifiable rules of limitations on the club's investments portfolio. For example, an investment club might specify to the members that they can propose only stocks for purchase that have a minimum share price or a market capitalization. On the club might have a sector restrictions on the portfolio to ensure minimum levels of diversification always exist. And I think that's what you were just saying, that you want to make sure that you diversify. Yes, absolutely.
So, speaking of diversification, when I'm just curious as to, sometimes when you get a group of people together, there's a variation of opinions,
personality
issues, and so how do you guys? I mean, okay, so I know that in your club, you're giving more education and you're not pulling together money, but how do you make that shift in getting somebody's mindset to understand the 80-20?
Well, the important thing is to help them realize it. So that's why I call it the Mindful Investors Club, because the whole thing about it is the more mindful you can bring people that they are already practicing the 80-20 rule in their everyday life, no matter what, the easier it is for them to translate it to investing, right? So of the 100 shoes you have, you probably wear about 20 of them all the time, and it's just never really a great time to wear the other 80, right? Of the time you spend most of your life at work, right? Most of your time gets designated in different places. You eat the same thing over and over again, right? And so this is easy when translating it to investing, right? Because at the end of the day, you want to invest in what you know, because we naturally come back to what we know. Right. And you have a level of understanding with what you know. So when I tell a person that, hey, if you're working in a healthcare office, right, and you're a nurse practitioner, and you see that the doctor is that you guys are using a certain brand of gloves all the time, right, and then you go to your other friends and they're using a specific brand of gloves, and all the equipment in your office is from this one company supplier, then you should look into what that looks like for that supplier. Obviously, they're making money, so maybe you should put that on your watch list. So it's not, it's just like like I've been around these things my entire life. How can I have it make me money now in addition to what it's already making me?
Right.
And
I mean, I can understand it doesn't make sense to participate in something you don't participate in. I mean, if I eat at Whataburger, why am I gonna? It makes sense for me to invest in Whataburger, but if I don't eat at Whataburger and I eat at McDonald's, I mean, it just
it makes sense. It makes sense. Well,
yes,
yeah. But you also want to realize that you're also not the litmus test for the entire world. So an example was, I recently got an iPhone maybe about 3 years ago, right? But I've owned Apple stock for years, and the reason why was because I was in the minority with not having the iPhone, right? All my friends had iPhones, all my colleagues, my employees. I was just the one who was just like, I don't want it. But if you're putting all your money in buying it, and this person's putting all their money in buying it, and they're clearly making money, not mine, then you're going to make me money too. And so that's an example of where it kind of shifts.
Yes.
If you see that it is definitely a trend, right? Baby boomers are getting older. People have to buy healthcare stuff. It's a trend going somewhere. Research it. Don't just throw your money into it, but you can research it.
Okay, awesome. Well, speaking of investments, this portion of our show is sponsored by The Sphere. Are you starting your own business or looking for a place to advertise, or do you need a reach out to thousands of people across the world to build your brand or sell your product? If so, get your product placement and advertising needs handled right here at The Sphere. We offer a wide variety of content delivery platforms, including iTunes, Google Play, SoundCloud, YouTube, and Stitcher. Plus, we have a vast demographic reach within the United States as well as modern countries across the globe. Our enriched content and inspiring dialogue, coupled with a strategic ad, is surely to hit the mark every time. Call us today at 832-772-7789 or send an email over to advertise@thesphere.tv. I tell you, this is a serious investment right here. I just love the Sphere. This is where you need to be investing, people, right here.
Yes.
Right here.
Gotta love Gary Lee and his show.
Absolutely.
I tell you. So we're gonna go into the Saving Your Future book. So
Awesome.
those of you who have been watching it. What episode is this, Gary?
67. Wow.
And you don't have this book. Shame on you.
Shame on you.
We've said that 100 times. But anyway, we're going to go to page 51 in the book where it kind of gives you some examples of what investing is about. And so I love that Angela talks about her club, talks about education, because I tell you, this is one area that you do need to have some information before you go into it. And so you need to understand what you're doing. You know, this is not The Boiler Room. If you guys have seen the show, The Boiler Room, the movie show, The Boiler Room.
I love that movie.
It's a good show, but hey, a lot of people they were talking to on the phone didn't have a clue.
They didn't have a clue
what was going on, and they were just passing out money because they were slick talked into it.
Talking to the doctor so fast.
Exactly. And so here's one thing I understand about people. People do not like to lose.
They do not like to lose.
They want to win. I don't know anybody that doesn't want to win.
Right.
You know, and so when you get into investing, yes, you want to win. I mean, you fear the loss, and you know that it could be out there, it's imminent. But people ultimately want to win, and that's why they keep playing.
That's why they keep
want to
playing.
win.
That's just like the lottery. That's why they play.
Even though the chances of winning the lottery
is
slim
to none, but why do they keep playing?
For the chance, for the opportunity
to have a chance
and
to
they
win.
would like to be that winner.
Absolutely.
So let's go to page 51 of the Saving Your Future book, and this talks about capital markets. Capital markets, stocks and bonds. So to know how money works, we should understand the financial markets, how the financial markets work. And I'm sure that's something that you cover too, Angela, in your education, correct?
Absolutely.
So generally, when a company needs to raise money, they can either issue stock or bond certificates. So that's how it works. That's how the economy churns. So someone that's going, a company that's going pre-IPO or they're going full-blown IPO, hitting the market. These are people that need to raise funds.
Absolutely.
You know, and there's two ways that they can do it. And so we as a consumer get to participate in that. And that's the wonderful thing, because based on how this market, how this company has been doing or how it's projected to do, then we can make a decision if we want to jump on board. And that gives us an opportunity to do that through investing. And so let's go back to the book, because it explains exactly what the first market is. The first market is the company sells stocks and bonds through a process called initial public offering, and that is what IPO stands for. So doing an IPO, this is the first time these certificates are being offered to the public, the very first time. Stocks and bond certificates are called securities.
Right.
And so why are they called securities? It's funny that they call them securities, because there's really nothing secure about them.
Secure about it.
Because there's no word, you cannot couple the word secure with investing.
With investment.
I mean, you can't even marry the two. In fact, you have to say all the time, well, past performance does not secure future past performance does not secure future performance or something like that. Something the word says. But you have to understand their securities, because you guys, you have to you can't do them alone. Even though, you have the investment clubs that you're a part of, at the end of the day, even Angela can't say, I'm telling you guys to make this choice based on what I told you. So I know that, you have to do these things at your own risk.
I'm glad you said that.
You have to understand that it's at your own risk. So you put your money in there. We didn't hold your head to the fire on that. You made that choice. And so that's the reason why they're called securities. So going back to the first market. So that's your first initial offering. So if you're just hitting, and I know sometimes people think that's the best time to jump in. It's always a big deal when things are going to kick off for the first time.
Right.
You're curious about how it's going to introduce, what's going to be the offering price. and then that's kind of like where the standard starts when it first opens.
Yep.
And so that's the first market. So we'll go into what the second market is. After the IPO, investors can buy, sell, and trade these certificates on the stock market. Okay. Among the world stock market, the New York Stock Exchange is the biggest. That's the one you see on TV all the time. All the movies are centered around it. And I know our company has been a part of it, rang the bell the first time, several times. Yes. And it's an experience to be on that floor. It's an experience to be a trader on that floor. And, you know, it's just like the movie says, crazy. It looks just like it. So have you guys in your club, do you guys get a chance to make so-called field trips, Angela, where you get a chance to go down there and check that out?
So I'm from New York. I haven't had a meetup in New York, but we do have meetups in, so far, Atlanta and LA. And so quarterly, we try to have a meetup in a regional area so that everyone can meet each other, because people in my club are literally across the country. So we do field trips, but more so just like, hey, I need to see who this face was that I've been seeing as a little Facebook icon for like a year is. And so we do things like that. Maybe in the future. That's a really great point, though. It is amazing. Because I'm from New York, I take it for granted.
Yes, so most people do, but it's an experience. I mean, if you're going to jump into that, right. I mean, you got to experience that. You got to experience what the floor feels like.
Yes,
that's a serious field trip.
I like it.
Okay. Also on page 51, it talks about stock. You know, we hear the word stock, Tony.
It says a stock is an instrument that signifies equity ownership in a corporation and represents a proportionate claim on a company's assets and profits.
Yes. It's important to understand what that is. So, yes, I mean, the stock is, I mean, I can buy a stock in you, Tony. I can buy a stock in you, Gary Lee.
I'll take one.
You know how you see how we just put that in there. We're saying how the Sphere is going to be
absolutely
on the open market one day.
Yeah, absolutely.
And he's like, yeah, you never know. But that's actually a good thing. So, you know, what kind of experience do you get from people when they hear the word stock, Angela? Are they like, what's the response generally from people when they hear that word?
When they hear that word, they're nervous a lot of times. Sometimes they feel confused. Sometimes they feel a little bit of like a regret in terms of like they wish they started sooner. So a lot of people like, man, I've been meaning to do that for a long time.
Procrastination.
Yeah, procrastination. It's like, oh man, okay. And then at the same time, I definitely feel hope, opportunity. So a lot of opportunity comes with that too. And people also kind of just, I find that it are ready because the stock market is doing really well right now. It's not like the recession where there was no way, you know, people who were new were more hesitant to get in during the recession. But now that it's been over 9 years since the market has been on an upward slope, I think more and more people are like, man, if I invested 5 years ago, it would be worth this. Or if I did this, then it would be worth this. And so
always the shoulda, woulda, couldas, right?
Right.
Usually, and then usually it's the super late adopters that end up hurting most in the end. But
I do have a question. So what is your median age of your group? The people who are a part of your group, what's the median age for them that's in there?
I'd say about 40. So I'd say half fall between, or I'd even bump that up to 42 or 43, because we do have quite a few people who are over the age of 50 in our group. 50, we've got 60-year-olds. But I'd say the lowest age may be around 35. And the reason for this, I think, is that that's when people start getting more serious. They've got their foundation laid out. They've got a property or two under their belt. And then they're starting to think, well, I've saved, but I want a portion of my savings to make more money. Like, it's just, I'm looking at it all the time. It's like getting dollars, like cents on the dollar. And so they're thinking like, well, why don't I have dividends? Why don't I have money coming back to me for all this hard work? And that's when they start thinking about like, maybe investing.
Okay, good. Well, we're at the third portion of our show, and it's sponsored by my favorite, KOG and Company. Are your unique gifts and talents changing the world? Unleash your dopeness. Is a people empowerment movement to encourage masses to operate outside of their fears and have the gall to recklessly pursue their dreams and passions in life. Join thousands of others as we unlock the greatness that dwells inside. Shop dope gear at kogpassion.com. That's kogpassion.com. And use your coupon DOPE for 10% off exclusive Unleash Your Dopeness apparel. Act now. Sizes are selling out fast. And I just love seeing this Unleash Your Dopeness. You know I love that. You know, I got it. KG, get with us, okay?
Unleash Your Dopeness financially. Okay?
I love it.
And so the last but not the least, I want to talk about what a bond is, because we hear that word a lot. You know, a bond is an instrument of indebtedness of the bond issuer to the holders. So when you hear the word bond, that's me loaning you money, Tony. Okay, I've loaned you money through a bond, and you've got to pay that back to me, Missy, at a said time and amount. And hopefully I'm going to get a good amount of interest on that bond. But really, it's a list of debts. So the more bonds that you have out on your company, the more debt you're in, and you're indebted to that person who you've issued it to.
Absolutely.
So, you know, as far as securities are concerned, as far as bonds are concerned, that's really the only thing that can be considered in the guaranteed realm is when you purchase a bond, because you know you're going to get the money back on it. Even if the company goes belly up, those bond issuers are going to be paid. Okay. And so you guys, you know, investing, again, is the roof on the house. You've got to make your money work for you. Okay. And there's a lot of ways to invest, but of course you also need to have your financial house together. I like that Angela said that the age range is 35 and up. The youngest is 35, because most of those people are getting serious. They've got their foundation in place. And when you have your foundation in place, and we can look quickly on page 5 in the Saving Your Future book, what that foundation looks like. You know, you've got the proper protection. Your debt is under control. You have an emergency fund. You know, you're not risking everything to jump on the roof of the house, which is the investment part. But of course, the wonderful thing is we encourage that you start. You got to start.
You have to get started.
You have to get started. Time is money, and money is time. So being a part of Investment Club for educational purposes, sitting down with a financial professional, getting your finances in order, making sure you understand how things need to work. It goes back to what we continue to say, get educated. You have to get educated. You've got to take control of your finances, and you have to make sure that you're putting your money to work for you. I can guarantee you our government is not going to do that.
Not at all.
So you've got to take responsibility for that. And so no longer can we subscribe to the shoebox mentality. We're putting our money under a shoebox in a cookie jar. That's not going to work for us. Okay. And especially if you're limited on time, then, hey, unfortunately, you've got to take some risks, because time is not on your side. And you need to know what you need to retire, what you need to for your short-term and long-term goals. And then you need to figure out with the financial professional, what is the best route for you to take to reach these goals.
So with that being said, you have to contact a licensed financial professional. You can contact me, Tony S., at HoustonHousewivesOfFinance.com, and
LaShonda J. at HoustonHousewivesOfFinance.com.
You can also reach us at 1-844-700-4463. We're on all your social media outlets and platforms. We're on Instagram. We're on Twitter. We're on Meetup. We're on LinkedIn. We're on Facebook, of course, as the Houston Housewives of Finance official. If it doesn't say official, it's not us.
And Angela, can you tell everybody how to get in contact with you?
Absolutely. You can go to Angela, ANGELAE, Matthews.com and find anything you need about me. You can also email me at Angela@AngelaEMatthews.com. And if you want to know more about the Mindful Investors Club, just Google Mindful Investors Club and it'll pop right up.
Awesome.
Okay, awesome. So you guys, it's been an incredible show. We're finally clearing off the roof of this financial house.
Tear that roof off the mother.
Say it again.
Oh, okay.
We might do one more, Gary says. So we'll see. Okay, you guys, it's been real. We'll see you next week. Same time, same place.
Here on the Spear.
Right here on the Spear. It's been real. See you later. Bye-bye.
Bye-bye.